Right, okay, so this is a trade that I discussed with the team. We're going to go through it. I'm going to show you how easy I think it is to trade Forex. Now, some of it, if you're looking at this brand new, you might disagree, okay? But this is real. This is something that was done in the group. So you should, in a second, he said, share screen, be able to see my screen now. So first of all, harmonic scans. Love harmonic scans. Harmonic scans, very, 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 very good, right? I can't show you the original scan because there's a new scan on it now, because this reacts to the price as the price moves. But this one is one today that I'm going to look to enter called GBP CAD. Right, so it's the pound versus Canadian dollar, and it's telling me that the price should drop. And I can just look left, and I can see that they're actually, you know, with a little bit of knowledge, I can see that we are in an area where it is potentially going to turn around. It might push up a tad more, actually. Might push up a tad more, but in actual fact, we're about there. So the scanner gives me a stop loss, gives me an entry, which it touch, look, and it gives me take profits. However, we can usually do better than that, right? Okay. So the one I'm going to show you is GBP AUD, and this was something that we were looking at on the 8th, the 5th, sorry. So we were looking at this one on the 5th, right? So on the 5th, the D point was down here. So if you look at this scanner again, it's giving me a D point. And what will happen is D will always generally move back to C, right? Sometimes it goes a little bit wrong, and that's why we teach you stuff, and you're going to see how to know, you know, you're going to have a better idea of when to get in to avoid that happening, right? But on the whole, D point will move back to C, right? So there was the D point down there. Text. So there was our D point. So D will go back towards the C. C would have been up here, most likely around about there. Okay. Let's turn these off. You don't need these, right? Okay, and you don't need that, right? So there is a possible trade there that you could have took, and if we put this on risk to reward calculator, long position, so you'd have got in on the D. And actually, let me tell you where to get in. Right. So what we do is we go down to the 15-minute time frame. So at the minute, if that's on the 1 hour, 1H, all of these bars represent 1 hour of time. We don't want that. Okay, we want to be able to get in better. So what in our group, we have something called the Ninjacator. And if we put this onto Heikin Ashi candles, a different style of candles that show trend, can you see how it smooths out all the red and the green compared to this, you know, red, green, red, green, red, green. So we put it on Heikin Ashi candles. We go down to the 15-minute time frame, and this will give us a ninja up alert or a ninja down alert, depending on which way the price is going. Now, unfortunately, I've tried trading just off the ninja up and down alerts, and it doesn't work, right? Unfortunately, although it looks like it should, you need a reason to know why the price is going to go somewhere, right? And the scanner gives me a fantastic reason of where price is going to go somewhere. So if we look at, we can find, you see some of these at the minute, that's because of some news. See that one pulled away, went back up towards C. What's this one? Euro NZD, right? And in actual fact, it failed. After that, it came further down, but that doesn't matter because we've made our profit there, right? We've made profit there. Long position, you'd have got in somewhere on that candle. You'd put your stop loss just below there, and you got a potential 1 to 3 basically. So you could risk 1% to make 3%. Right, let's go back to our example that we actually talked about. Right. So as you can see, we are getting a ninja alert on this candle here. We're getting a ninja alert there. So I'm just going to put an arrow on that one and go back to ordinary candles so we can measure this properly. Right. So go back to ordinary candles. So you might not understand Heikin Ashi, you might not understand ordinary, but can you understand this? D back towards C. So I'm expecting the price to go up. Now, and this, I'm going to get rid of that because that is annoying me because that just keeps going. Right. So we expect price to go up. We wait for a ninja up alert, which we got on this candle here, right? So that candle there. So that would be the alert candle. If you wait the full 15 minutes, right, you don't get into the candle after, right? So just so you're aware, I'm not looking to get in where the arrow is. I'm looking to get in on the candle after, right? What you would do, you would set a stop loss in case the trade went against you. You can kind of say to, you can say to the trading system, look, if the price comes down past there, let's make that red. If the price comes down past there, just close me out, because obviously it's not going up, it's going down, right? And that is where people say Forex is risky, and it isn't if you follow the rules. You do lose trades. Everybody lose trades, right? Everybody lose trades. We all lose trades. But if you regulate your profit, what you're going to say is, I am going to get into this trade. So, no, wrong one, Paul. Right. I'm going to get in, not on that candle, this candle. And I know I can tell where the candle started because it starts, if it's green, it started at the bottom. So I'm going to move my stop loss to there. Okay. And I don't know where take profit one on the scanner was, but it would most likely be there or there. So I'm going to put take profit one from the scanner to there. That's a 1-to-4. That gives me a 1-to-4 risk to reward ratio. So if I've got $100 account and I'm going to risk 1% into this stop loss bit here, right? So if I lose $1. If I win, I make $4. If I had $1,000 account, if I lose, okay, 1%, I'm only going to lose $10. And if I win, I'm going to make $40. If I've got a $100,000 account, which we're looking at with these prop firms now, these people that will fund you, if you've got a $100,000 account, you risk 1%. Well, that's, you lose 1,000 out of 100,000. That's affordable. If you win, you make 4,000. That is a month's salary for people, right? That's an average household income right there. Okay, so you get to keep 70% of that with one company, 80% of that with another company, right? Take profit 2 would most likely have been there on the scanner or even up here, right? So if you just use the ones the scanner give you, that turns it into a 1-to-5.6. If you stay in the trade, that turns it into a 1-to-8, risk 1% to make 8%. Now, why do I have this line drawn here? And you're going to assume that I drew that in. Okay, no, I did draw that in based on what happened, right? So why do I put a line there? You're gonna assume that maybe I drew these lines in after, because you can see the price went up. Price went up and hit it up, right? If you stayed in, and I'm not suggesting you do because it takes a long time, but in theory, guys, you've got a 1-to-11. 1-to-11. So you could have taken 11% return on that one trade. So D at the bottom, I expect price to go up. Put it back on Heikin Ashi. Now, what I want you to notice is we have got wow. Okay. We have got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. You've got really 26 possibilities potentially to get into that trade, even if you miss the first move, even if you miss the first move. The other thing that we do, I won't cover it in great detail now, but can you see, if we run ordinary candles, if I just go back to the 1 hour, make it cleaner. Can you see that this, okay? So how this works is we're in a downtrend. Down, down, and these are called lower highs. So the price is coming down. So after here, you can expect another lower high. But what happened is the price came up, look, and we got a higher high. That's what's known as technically a breaker structure. Now, that isn't much higher than that, but it would work. And what we could do is we can draw these things called fibs on, and we could say we would expect the price to come down into this 71, 78 zone, these lines here. And as you can see, that touched it exactly to the pip, to the absolute bang on the line. That worked. To make our lives safer though, to increase our chances of winning the trade, because I don't like things being that accurate, okay, unless it's a surgeon or somebody operating on me, right? So what I do is, okay, well, the price pushed up to here, so we can still use that, okay? And then as you can see, in that case, it went to the bottom of it, okay? Actually, if I tighten that up even there, yeah, went to the bottom of it still, but we're still in that zone where I could potentially get in. When you've got that break and we expect the downtrend to start going into an uptrend, i.e. the price start going up, you can see what happened here. The price just sort of what we call consolidated. So I had even more chances to get in. And then we have a fib level up here. So this trade here, what you would do is you would go long position. You have to enter, you have to take that as your entry. So I could go about my daily business and get alerts for these, or I could just set this as what's known as a pending order and walk away. That would be my ultimate target. Okay, put my stop loss. Again, stop loss would go just below the previous lows. That makes it a 1 to 4. When you're a bit more advanced, you can actually go, well, I would put that there. I'd put that there. So that turns it into a 1 to 6, but that's more advanced. If you don't know what you're doing, you put it there. 1 to 3 point. Well, 1 to 4, there you go, 1 to 4. So there you go. I use the software to let me know the price should be going in a particular direction. I use the Ninjacator, our software that we have in the team, our indicator rather, to let me know when is a good time to potentially get in or out. If you're expecting ninja ups and you get a ninja down, it might be time to get out on a ninja down. So I use the software to let me know when to go. And all of this is just more advanced stuff. I usually, guys, just get 10 pips off that first move. That's what I look to do. So that was the alert candle. So I get in on that one and I need 10. I could have got 26. It's good stuff, guys. It's good stuff. That is the easiest way I know to trade Forex. If you want to do it, and if you want to get your hands on the software, there's currently $50 off at the minute. I'm giving my NLP course that I'm working on for Forex traders to help them be successful with it. I'm giving that as well. Everything to play for. So with that said, get back to the person who shared this video with you. Or if it's me, there'll probably be, you know, you can contact me for more info, or there'll be a link to look for more info. And I'll see you on the next video. Thanks for watching. I appreciate it. Bye.